Now, if you don't like the volatility of the stock market, you might want to diversify your funds with some fixed income instruments, which tend to have more steady growth and generally less risk of crashes. I'm here to present to you a CD alternative, Lifetime IUL, that offers both permanent protection as well as the potential for cash accumulation while giving you continued access to your funds. Now let's look at what the actual interest rates are in today's environment. These are lower interest rates for today's saver. Now, if we look at your savings account, yours and mine, it's 0.06%. Your money market account is 0.08%. 1 year CDs, 0.13, and your 5 year CDs are 0.28%. It is not enough to grow your funds. The potential challenge here is that, according to the US Treasury, interest rates have been falling since the 1980s and are currently near historic lows, as you see here. Now, most of these common savings vehicles return very little, and it's very hard to grow your retirement savings with these rates shown here. Now, these are cash accounts. You've already paid the taxes on these accounts, so these are non-qualified income or non-qualified balances, okay? Which means taxes already have been paid, meaning this is your cash accounts. And this could be for emergency. These accounts can be for liquidity, reserves, cash for just any reason. You want it there, you can quickly get to it, but at the same time, you want the protection at the same time. But as you see, it's very hard to grow that your money during this current very low interest rate environment. Today's changing world calls for the dependability of insurance protection. Tomorrow's challenges demand financial security. You and your loved ones deserve the certainty of a financial product that can securely provide you both. Lifetime IUL is an index universal life insurance policy with living benefits. Like traditional fixed vehicles, Lifetime IUL offers the advantages of a financial legacy plus the option to earn interest linked in part to the S&P 500 index. This approach affords you the opportunity to benefit from stock market gains without fully risking your money during market declines. Lifetime IUL also offers benefits that can be used to cover major costs in the future, such as home expenses or terminal or chronic illness. In addition, Lifetime IUL goes the extra mile and provides peace of mind by providing a full return of premium, guaranteed. You've worked hard to build your assets. Now it's time to enjoy life by implementing a financial strategy that gives you confidence. Expect more. As the cost of living continues to steadily rise across the United States, many Americans often overlook the importance of planning for a stable financial future. Protect your future with Lifetime IUL. Now let's look at the highlights of Lifetime IUL. This is specifically designed for today's market environment, our low interest rate environment, and also we are experiencing high inflation rates as well at the same time. The Lifetime IUL offers benefits and riders to protect your wealth as well as the opportunity for your money to grow over time, because we put our money in CDs, for example, for growth and for protection, because we don't want to subject our cash due to market volatility. That's why we put them in CDs for the growth, and we want that protection at the same time. Now let's look at the alternative option, which is the Lifetime IUL. Now with this product type, it is an index universal life, of course, the IUL. The issue ages. Now, if your age is 45 through 85, you can do a single pay option, or you can do a 5 pay option, which means a 5 years over time. So, for example, if you have $100,000 and let's say you have $100,000, for example, in a CD, and you want to diversify that, move it from the CD because of the low interest rate that you're getting, and you wanted to put into the Lifetime IUL, you have two options. You can do a single pay. You can drop all that amount into the single pay, just a one-time payment, and you're done forever. Or you can spread out that $100,000 over 5 years. Now, if your age is 45 through 80, which is just a 5-year difference, ages 45 through 80, you also have a 10-pay option, meaning you can spread that $100,000 premium over 10 years instead. And we can talk about why you would choose one or the other. I'll explain that later on as we continue here. And then if you look down here at the premium classes, if you're male, as a male or as a female, you are going to be approved whether you smoke tobacco or if you are non-tobacco, you're a non-smoker. And these rates do differ if you are a smoker or you're not a smoker. And when we do work together, because you do have to be approved for this strategy, since this is life insurance, we will have to run the numbers and see which rating you're going to get. But this is just a baseline of how this product works. Now, when it comes to the minimum investment that you can put in, or the minimum premium, I should say, because this is not an investment, this would be your principal. So let's say your principal. So your minimum principal that you can put into the Lifetime IUL for males that are non-smokers, you guys can put in $8,900. Okay, that's your minimum that you can put in. For my females, ladies, you can put in, if you're a non-tobacco, you can put in $8,000. So this is just a baseline, just to get your mind going of how much. If you look at your accounts now, your low interest rate fixed income vehicles that you have now, this will be it's a great start to see, just to know how much you can start with, and then we can go from there. The reason I love IUL so much because it's so versatile, it's so flexible. You can use it for any reason, and you can design it the way you want it to be designed. And it's very competitive, and it does so much more than our traditional, accounts that we are so accustomed to. And that's the reason I'm doing these videos, because I can compare IUL with what you and I are accustomed to going towards or purchasing. So let me talk about why to consider the Lifetime IUL as a CD alternative. Let's look at the first one. The Lifetime IUL is for those who are the not interested. And this is funny, the not interested. And that means if you're not getting the interest that you need, or the interest rate that you would like to get to grow or accumulate your money, this is the right fit for you. And I did cover that. I think I did a good job already at explaining that. So the not interested. So this is for you, for those that do want the Lifetime IUL. If you want to continue growth, this is for you. The Lifetime IUL is also for the RMD players. Now, what does that mean? Now, let's talk about RMD. RMD stands for Required Minimum Distribution. Now, Required Minimum Distribution is for those who are going to turn 72 or are already 72, plus he or she has an IRA, let's say a Roth IRA, and this is more for your beneficiaries, the Roth IRA. But let's stick to their IRA. This is for qualified accounts. And let's stick with that example. Let me take out the Roth IRA. It applies, the RMD does apply to the Roth IRA, but that's for your beneficiaries. But let's stick to the IRA. If you're age 72, if you're about to approach age 72 or already age 72 or older, and at the same time you have an IRA, which means you have a tax deferred retirement account, you are required to take out RMDs every year, that are taxes. That is Uncle Sam's portion because you have their account. It's not your account, it's yours and Uncle Sam's. So this is a partnership, the IRA, and these are for RMD players. So you can use the Lifetime IUL because you can get the growth, plus it has liquidity, and I'm going to show you liquidity in a moment. But you can use specifically the Lifetime IUL if you have RMDs that you have to pay every year. You can take the liquidity percentage out of your IUL policy to pay your RMDs. And that's actually fabulous because you don't have to worry about RMDs. If you have the Lifetime IUL, you have a place to pull from for your RMD taxes. Next, let's look at the other way that the Lifetime IUL can help. Now, the Lifetime IUL can also help the withdrawal refusers. Now, that is a kind of a tongue twister, withdrawal refusers. Now, this means that you put your money into, let's say, let's go to the CD, because that is our comparison. You have 100,000 in your CD, but you want it for growth. That's it. You're not going to touch it. You don't need it for any particular reason. There's no, let's say it's just a reserve. Okay, it's a reserve. You have no intention of taking the money out in the next year, next 2 years. It's just there to sit, and it's there as a reserve. You have no reason to take from it. This is what I mean by a withdrawal refuser. You can take your 100,000, you can put it into the Lifetime IUL just for it to have the growth that you want and the safety that you deserve. And you have no intention of taking it out, and you just want it to perform and provide. In addition, the Lifetime IUL is perfect for nursing home orphans. This means if you have a loved one, a friend, and they cannot qualify to have nursing home care, or they don't have the necessary means, the funding to provide that on a monthly basis, this actually works great for those that are in that position and they need a better option or another means to go around that or to provide for that. So this works perfect for nursing home orphans. This also works great with informal caregivers. Now, informal caregivers are also called family caregivers, are people who give care to family or friends, usually without payment. A caregiver gives care, generally in the home environment, for aging parents, a spouse, or other relatives, or unrelated persons for an ill or a disabled person. And this works great with this as well. Now, it also works great for windfall earners. Now, this has to do with Social Security because the windfall actually stands for the Windfall Elimination Provision, the WEP, Windfall Elimination Provision. This was intended to remove an unfair advantage that the Social Security benefit formula provided to workers who had earnings from work not covered by Social Security. In 1983, Congress noted that unfairness in permitting split career workers a higher replacement rate than workers who had identical earnings but who had never worked for an employer who did not participate in Social Security. So in other words, if you throughout your career, or if you're still working, if you work 2 jobs, one job was covered by Social Security, so you're going to get that benefit. And let's say your second job did not participate in that, which means you cannot, quote unquote, double dip. Even though you work for an employer, you were not getting that Social Security built in over time, so which is called the Windfall Elimination Provision. So you're not going to get compensated by working two jobs, even though one covered for Social Security, but one did not. So there's going to be a payment decrease in your Social Security benefits because one employer was not participating in the Social Security program. So the Lifetime IUL works great for windfall earners to make up that loss that you could have had from the employer that was not participating in the Social Security program. So this works great to make up the difference in that income. And then finally, the Lifetime IUL will work for final expenses when it comes to friends and family. I know it's not a popular topic or a comfortable topic, but it's something that we do have to plan for. If you do have a extra cash, extra money that you do want to put aside specifically for final expenses, Lifetime IUL will be the perfect fit. So as you see, we cover the different ways that you can use this IUL strategy for different reasons. So you can use the Lifetime IUL for the not interested. So you can get your interest rate that you would love to get and deserve to get. You can use it for your RMD taxes. You can also use it for not withdrawing if you have no intention of taking the money out. You can also use it for nursing home expenses. You can use it for your informal caregivers. You can use it to make up the difference in the windfall income of your Social Security. And then also you can use it for final expenses as well. Now, when it comes to the type of money that will work perfectly with the Lifetime IUL, you can use your CDs that we mentioned. You can use your money market account. You can use your mutual funds. It also works great for rainy day funds, for just in case. You can use funds not needed for daily living expenses. And then also you can use any lapsing or threatened life policies. So if you do have any existing life insurance policies and they're on the cusp of lapsing, maybe because you took too much money out and it was above the account balance, or you can no longer pay the premium, or for any reason it's going to lapse, meaning if you have a permanent life insurance lapse, your policy will officially lapse once the grace period ends, meaning your coverage will end and no death benefit or a financial legacy will be paid. So you're going to lose that. Your policy's cash value might be used to fulfill your unpaid premium. So if you're in that situation and you want to save what you built up over time, you can use that and put it inside the Lifetime IUL to save that. Let's dive deeper into the Lifetime IUL because it does have benefits and riders included at no additional cost. In addition to the fundamental protection provided by Lifetime IUL, the following benefits are automatically included in your policy at the time of purchase, if approved, in the state of your application. These benefits are available at no additional cost. Now, let's look at benefit number one. You do have a return of premium. That is music to my ears. A return of premium means a return of your principal. So let's stick with our $100,000 example. Let's say you put $100,000 in, and let's say in the next 5 years you want to take it out for any reason. You do have that return of your money. It only works, or it's only applicable if you choose the single premium payment option, okay? It does not work for the 5-pay. It doesn't work for the 10-pay. It only works if you choose the single premium payment option that I mentioned. Secondly, before I go into the next one, let's stick with the return of premium, the ROP. The return of premium rider Upon written request provides the return of all of your premium for any reason, no questions asked. This value will be adjusted by any partial withdrawals, loans, and loan interest, and the rider benefits are paid to you. This will terminate your policy. So please keep that in mind. This is intended for long term, of course. So if you have any reason at all that you can foresee in the future that you're going to take your money out, just keep in mind that it's going to terminate your policy. But the great thing about the ROP, the return of premium, is you do get your money back when you need it at any time for any reason. Secondly, we are going to look at the accelerated death benefit rider for terminal illness. In the event you become terminally ill, this rider provides access to your death benefit while you are living. That's why it's called living benefits. The benefit is designed to help cover the expenses of daily living and offset the cost of your medical care. I do have California only because this particular vehicle, the Lifetime Iul, it only provides this accelerated death benefit rider in California. Now, if you live out of state and you do want this benefit here, this rider here, there are other ways for me to provide that for you if this particular need is something that you want in your plan. And thirdly, the third benefit in the Lifetime IUL is the paid up rider. The paid up rider, for example, if your loan balance is ever close to exceeding the account balance of your policy, this rider can prevent your policy from lapsing. And there are 3 conditions in order to use this rider. So, for example, with an IUL, generally, it's also applicable to the Lifetime IUL. But let's say you put the money in, your $100,000 in, and let's say fast forward from today, you had it for 10 years, and you built up a significant amount of cash value, and you want to get access to $50,000. And that's a need maybe for a new roof, a new car, a down payment, just for anything. You can take a loan out of your policy here of $50,000. And the key way to do it is that we have to make sure that your loan balance, just overall, does not exceed or come close to your account balance of your policy. So your account balance has to be greater over the loan balance, or your policy is going to terminate. And that's why I like the way this Lifetime IUL is designed, is because it already has that safety net in the case that your loan balance comes close to or exceeds your account balance, and it's going to turn on and prevent your policy from lapsing, so you do not have to worry about losing all your benefits and all the interest earnings that you accumulated over that 10-year time horizon in our example. So that's a great safety net. So it's going to protect you in the long haul. And these are the benefits that come with Lifetime IUL. And it comes, obviously, doesn't come with your CD or your money market account. And these are great things to consider. And it just does more than that we need right now. But it's something that we are going to appreciate and be glad that we did have these things, that we did not have to pay extra out of pocket. It just came along for the ride, and I think that's something you're going to appreciate over time. There's optional benefits and optional riders that you can turn on, or you can add to your plan, but it does come at an additional premium charge. You can supplement your policy with additional benefits and riders. These optional riders are available only at issue and only with the single premium payment option. So when we do meet together, that's why we're going to talk about your goals, what you're planning to do, what you think you may need in the future. And these, because it comes with extra premium, I just wanted to show you other things that you can add to your plan when it comes to using your cash, and you can add more things to that. So let's briefly, I just want to go over that so that you know other things that you can consider when we do meet together. Now let's look at the first one. This one is the Accelerated Death Benefit Rider for chronic illness. This rider provides an advance of the death benefit in the event you suffer from a chronic illness. Now, your physician must certify that you have had a chronic illness that has lasted at least 90 days. You have the option of an annual benefit, which is up to a maximum of 120 grand a year, or you can do a monthly benefit that's at a maximum of $10,000 a month. The second optional benefit and rider, it's called the Accelerated Benefit Rider, and this is for qualified care services. The Accelerated Benefit Rider gives you the option to access a portion of the face amount of your policy if you need qualified care services or if you become terminally ill. If receiving qualified care services, you have the option of a monthly benefit of $10,000 a month, or if you are terminally ill, you can choose a lump sum. So one full payment equal to a maximum of $250,000. And that's just a lump sum, which means a one-time payout. So these are the optional benefits and riders that you can choose if you so wish to add to your plan. And it's for an additional premium. So we can talk about that if that's something that you want to add. But these are just optional riders for you to consider before we do meet together. Now let's look at the liquidity. Now this is what I know you guys have been waiting to hear more about. This is when it comes to liquidity. So as we know, when we have our mutual funds or money market or CDs or savings, it's for liquidity more often than other reasons. Now there is freedom to access your policy. Now when it comes to liquidity, the Lifetime Iul provides you access to your policy values. You decide which liquidity option or options will best serve your financial needs. Now, the first one is the 10% a year. Each policy year after the first year, you may request one free partial surrender of up to 10%, with the minimum being $200. Of the account balance without a surrender charge. Any withdrawal over the free partial surrender amount will incur a surrender charge. So don't worry about that surrender charge. Just know that you do have 10% that you can pull out each and every year after the first year, and it's a free withdrawal. The second one is the return of premium that I mentioned. Now, this ROP, it automatically is included in your single pay policy. It provides the return of your premium for any reason, no questions asked. Your return of premium value will be adjusted by any partial withdrawals that I mentioned right here. It's also going to be adjusted if you take out any loans that I mentioned as well, and in those loan interests that came along with that loan. And it's going to be adjusted from any rider benefits that are paid to you. Exercising the rider will terminate your policy, but you can get your money back when you need it at any time. Now, the other liquidity option is a full surrender. If you decide to surrender your policy, the cash value will be available to you on any monthly anniversary upon written request. The cash value is the greater of the account balance and the minimum guaranteed account balance, minus applicable surrender charges, outstanding loans, and loan interest. And when we do meet, I will I will disclose what because there is a surrender period when you purchase the Lifetime IUL and your ages 45 through 80. There are specific let's see here, policy years that you have to keep in force if you do a full surrender, but you're still within that surrender period. You will get a surrender charge, but I will cover what those surrender period years are when we do meet. And then last but not least is the policy loans. These are policy loans that you take out that I mentioned as well. You may obtain a loan using the cash value as the collateral. You may repay any loan at any time while the policy is in force. A loan does not affect the crediting rate applicable to the account balance. And I can discuss in detail when we do meet how the policy loan feature does work, because you do not have to repay it back in your lifetime, but you do have the option to repay it while the policy is in force. So these are the liquidity options for you that you can exercise so you can get that access to your cash when you do need it. So let's just do a recap. You do have the option of taking out 10% a year after year one. You can have a return of your premium if you do choose a single pay payment option, and you can take it out or get your money back at any time for any reason. You can do a full surrender, and you can take out tax-free loans in your policy. And I really didn't talk about any tax-free loans. I do mention it in my other videos, but it does work in this as well, because this is still an IUL. Even though it's a CD alternative, it's still an IUL. So you can take out tax-free loans from the policy. Okay, so I hope this clears up your liquidity options when it comes to accessing your funds. How does my money grow? If I use a cash account, if I use that Lifetime IUL as a cash account like my CD, how am I going to get my growth? We're going to discuss that right now. We are going to select your interest crediting option strategy. The Lifetime IUL offers several index interest options and the fixed interest option to diversify your interest strategy. At the time of your application, you select how to allocate the account balance. If you're normally used to getting a fixed interest annually, you also can continue that as well if you want to continue getting a fixed interest. The fixed portion of the account balance is credited monthly at an annual interest rate that will never be less than 2% compounded annually. So the thing I love about the Lifetime IUL is that the fixed portion, it is never going to be less than 2%. Because remember, in the examples of fixed accounts that I had mentioned, none of those accounts come close to 1%. They're very low. They're all less than 0.50. In this case, your account will never be less than 2%. The minimum interest crediting rate, or what I call the floor, is guaranteed never to be less than 0%. This is your protection for market declines, crashes, market adjustments that are negative. This is what I love about IUL, is that the minimum interest that you're going to get, the minimum that you're going to get is going to be 0%. This is the floor for your protection. This means that you will never lose money in your account balance as a result of market performance alone. Interest is credited at the end of each index anniversary. Once interest is credited, it is locked in and cannot be reduced solely due to market changes. interest has the potential to continue to compound. So year after year, your principal is going to get its gain. It's going to lock in that gain. Your principal plus that gain together is going to compound again the following year, and again and again and again. The interest crediting that we're going to choose if you want to participate in indexing and not just the fixed, the interest crediting that's applied to the index portion of your account balance is based on the change in the index during the period of time specified by the option. So your options are, you can do a monthly crediting or you can do a yearly crediting option. The credited interest will differ from the actual index change. So in other words, your credited interest in your policy is going to be different from the actual crediting that's coming from the S&P 500. And that's because your gains may be limited on the upside with an index cap, because there's a thing called caps, a cap rate, and there's things called a participation rate, a par rate. So when I mentioned that your credited interest in your lifetime IUL, let's say you earn 8% in a particular year, but the S&P 500 it credited 10%. You are not going to get that 10% in your policy. You're only going to get 8% because there's a thing called caps and there's a thing called participation rate. And I can discuss in greater detail in your appointment of why there are caps and why there are participation rates. And don't worry, that is a great thing, because the reason there's caps and the reason there's participation rates is because you're getting the floor protection. Okay, that's the trade-off. You get a safety net of 0% in the case of a market decline, so you'll never lose money. Let's say in 2008, you didn't earn in 2008. Most people that had qualified accounts or stocks or bonds or stocks, for example, they lost money. But with this IUL strategy, you had a floor of 0, so you were protected from losing. But let's say in the next year, the market was climbing, you get the upside. So you have the upside potential, but there's caps and there's participation rates. But the trade-off is there is a floor of 0% safety. So that is the trade-off. So we're not greedy, but that is how it works. And that is a great thing, I believe. That is a great thing to have, because you can get a great rate of return and you also have that safety. No matter which strategy you choose, remember, if your strategy changes, you can always reallocate on the next index date. No matter which option you choose, your principal is protected. Index interest options offer growth potential with market increases as well as protection during market downturns. You will never lose the interest you've earned due to market performance alone. Okay? You will never lose the interest you've earned due to market performance alone. Holding onto the gains during periods of market loss give you the advantage of compound interest in the future. That is so beautiful. I love this feature of the IUL. You can hold onto your gains during periods of market loss that give you the advantage of compound interest in the future. You have options to access your money. Now let's see how it works to qualify for the Lifetime IUL. You can't simply just put your money into this policy that you're taking out from a CD account. Okay, there's ways that you have to qualify for this. Now let's look at step 1. Step 1 is, first you have to book your accumulation strategy with me, and I'm going to show you how to do that next. Step 2 is that you have to complete an intake form. That's my form. So once you book your time and date, you're going to be automatically taken to an intake form with DocuSign, so we can make sure there is protection when we're transitioning or transferring information over the internet. And this intake form is going to show all the things that I'm going to need from you when we do this particular strategy inside the Lifetime IUL. Step 3 is an e-application. Okay, I'm going to make it very simple for the both of us. The e-application is what we are going to fill out together. That's going to go with the particular insurance company that's going to help us with this accumulation growth strategy. And then step 4 is a telephone interview. This process is so simple to qualify for this CD alternative, is that once we do the e-application together, we're going to stay on the phone, and then we're going to call over to the carrier, and they're going to do a telephone interview with you. And I'm going to prep you before we call the carrier, and I'm going to give you a cheat sheet that I already have pre-filled out that I help my clients go over. And then once we call them together, the phone call is going to last about 30 minutes. Now, the qualification for the Lifetime IUL, it's so simple. It only takes the telephone interview. There's no medical exam. You don't need blood, urine, or anything like that. There's no medical exam required. It only requires a telephone interview. Okay, that's the beauty of this. This is why I chose this particular tool as a CD alternative, because it's very easy to take the steps to get qualified for you to use this. So step 1 is book your appointment, complete the intake form, and then once that's done, we will do the e-application together. And then step 4 is we'll call over to the carrier to do that telephone interview. Now, there's some additional information that I need you to be informed of. Now, when we talk about tax advantages, your policy's cash value accumulation will grow tax deferred until you begin to withdraw the funds or surrender the policy. Your death benefit, or your financial legacy, I like to call, it proceeds to your beneficiaries that are normally income tax free, and your accelerated benefits are also normally income tax free to policy holders. Now, subject to certain conditions, your withdrawals or your loans may be taken on the policy without incurring income taxes as long as your policy remains in force and it has a life insurance death benefit. If the premium payment is a 10 pay. So, if you want tax-free income from your policy in the form of withdrawals or loans, it only works on the 10 pay. Okay, so there's some planning to do together. So we have to talk out, do you want to do a single pay? A single pay has the return of premium, but it doesn't work on the 10 pay. But if you want tax-free income in the form of withdrawals or loans, it only works on the 10 pay. And we can discuss that more in detail, and we can strategize, what option works best, the single pay, the 5 pay, or the 10 pay. So there's there's ways that we have to calculate to get this plan just exactly the way you want it. And also, there is an annual statement that you're going to get. The carrier will provide an annual statement containing a report of your policy values at least once a year. And then legal reserve. As a legal reserve insurance company, this carrier must set aside a portion of its assets equal to reserves required by law. Now, I'm going to break down what legal reserve means. And I always break it down when I talk about IUL. And it's very important that, let me say this. It's important for me to choose the right carrier, not only for the right strategy, but also in the case if an insurance company goes bankrupt. That means if an insurance company goes bankrupt, what happens to all your money that you put in? So I only partner with the right carriers that are A plus uh, insurance carriers that are at least 100 years old, that have been here for centuries, and also that are legal reserve companies. And that's what this carrier that has the Lifetime IUL financial tool. I'm going to give you the actual name of the insurance company, the name of the actual insurance product, and I'm going to give you all that disclosure in our appointment. I don't provide it in this video, but I will provide it when we do meet, because that's where it really counts, and that's what it really matters. Now I'm going to break down what a legal reserve is. The question is that people often ask is, where can I place my money that can provide safety and security in uncertain times? One place that should be considered is life insurance companies that have a legal reserve classification. Okay, not all life insurance companies have this classification, but this one that I'm showing you here does. Life companies that comply with the legal reserve requirements established by the state insurance laws are known as legal reserve life insurance companies. Legal reserve companies had their strongest showing of strength during the Great Depression of 1929 through 1938, when some 9,000 banks suspended their operations while 99% of all life insurance in force policies continued unaffected. Many people are not aware that it was not the government that bailed out the banking industry during the Great Depression. It was the United States insurance companies. Most state insurance departments, they have a mandate of a conservative statutory accounting system that will ensure company solvency. This statutory system has been successful for decades in minimizing insurance company failures and preventing policyholder losses. The state insurance department does review and measure the insurance company's cash flow and liabilities to ensure that they have the cash to meet policyholder obligations. They are audited by state insurance departments at least every 3 years. Life insurance companies also file quarterly and annual statements. Insurance companies cannot capitalize their expenses to do business like WorldCom did, and it cannot transfer their liabilities and declare profits today based on future events like Enron did. And then in closing, today the life insurance industry provides more than $1 trillion of protection to American consumers. Through strict state insurance department regulations, the establishment of many state insurance guarantee associations, and because of the insurance industry's history of financial stability and public responsibility to operate in a manner not detrimental to the welfare of the community, your policy, your principal, and your interest is guaranteed to be secure by industry safeguards. The legal reserve system was designed to ensure a high level of safety for each of us. It was designed to ensure that annuity and life companies have the cash when we need it. I hope you enjoyed the CD alternative when using a Lifetime IUL in place of your cash accounts. Please do so right now and book your accumulation strategy with me. You can go to this link right here, and it's going to take you straight to my calendar, and you can go ahead and book your time with me and follow the necessary steps. This was so much fun for me. I love teaching on this, and this is an excellent alternative. It's another great option for substituting your low interest savings accounts and using the Lifetime IUL in its place. And it comes with all those features, all those benefits that I covered. So you get more more things for your money. Some things you may haven't considered, maybe you don't need, but it comes with this plan with no additional cost. And it's just built out so much better than your CD account. And I hope you enjoyed it. I know I did. And please book your accumulation strategy with me. And I look forward to meeting with you and just getting this plan in place for you. Thank you so much.